Hello, this is Martin from CKEDGE, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show. We will look at what happened in the market during the last week and how we can plan for a better trade for the next week. And this is analysis for the week starting from August 16th, tomorrow, Tuesday, 2022. So without wasting time, let's get into the charts. What you see here is the weekly Nifty 50 charts, and on the right side you have the Banknifty charts. There is no doubt about the bullishness, right? Because you see wide range bullish candles alone, and last week there is no different. It is a wide range bullish move. And look at Banknifty, it's even more wide range. Clear bullish candlestick pattern is what you see, right? The only thing that you have to keep in mind is that if there is a trend line that's joining all these previous swing highs, we are still at the top, probably waiting for some more confirmation of a breakout from the trend line channel. Bank Nifty also, if you draw a trend line channel, we have a clear breakout, much more confirmed than the Nifty, you can say. So in effect, it's at the crossroads, you can say. Right, but it's not 100% confirmed of a potential breakout that may happen, or would there be a reversal that could happen down the trend line channel bottom, or could there be a small retracement of few days consolidation before it gets enough of energy to break out conclusively, is what we have to watch out for the next one. Let's look at the daily charts. What you see here is a gap up and then some consolidation, 2 days of an inside bar is what you see at the top. That's more like a spinning top, not exactly spinning top, with the width of that is little extra, but not a long range also, because the wick size is more and body size is small comparatively. Bank Nifty, if you see, it's clearly showing more bullishness after the gap up, right? So there is only one decisive day prior to the US inflation data outcome date, right? Otherwise, Bank Nifty had consolidated when it did a dip on Friday, I believe, right, where it had made a good swing low, and then after that it was kind of breaking out, is what it says, right? So one thing that here also in the daily charts of the Nifty and Bank Nifty, what we can notice is that there are enough of gap supports on the downside. We have a gap support right here where it has bounced yesterday or the last trading day. We have another gap here, we have another gap here. These are all gap ups that happened in the rally of nearly 16 or 17% and nearly 21% of move that happened from the swing low. So these gaps would effectively act as supports. Same with Bank Nifty also. It also has got of gap supports on the downs. Gaps, window gaps in technical analysis terms, are very powerful as resistances and supports, more powerful than previous support, normal other kinds of supports, you can say. Sometimes gaps are very powerful. Now this is Bollinger Bands that you see. So Bollinger Bands explain the volatility expansion, right, and it gives an indication on where the market is heading. So you can see that the price is walking on the bands, right? That's what you see. It had slipped off 3 days back, and then there is another attempt to climb close to the bands. So rising bands and price moving close by the upper bands indicates that the bullishness is very much evident, right? The only question is, it has been quite a bit far from the moving average or the median. So the more it is away from the median, there is a likelihood that it can get attracted towards that. That is the only question. But clear bullishness or up move or price movement is what you see, and what is indicative from the Bollinger Bands. This is another view of another charts on the investing.com, and left is Bank Nifty. It clearly shows the previous swing highs, so the lower highs that's formed, and actually we have broken out of it and we have a good gap support here. Look at this dotted lines, which are all acting as gap supports. Banknifty also, look at this dotted lines, these are all supports on the downside. This also clearly shows the top breakout from a trend line, but look at what is the breakout that's happening on the trend line. It's kind of not a decisive wide range, a single day closure has not happened here. And also you can see there is a gap resistance that is right at 17,921. But in the case of Bank Nifty, we only have previous swing highs that has to clear a couple of them, that's all. But Bank Nifty has got a gap resistance also. So this is another uh, perspective of the same charts of the Nifty and Bank Nifty that shows that where exactly we are. If you look at the support and the resistance levels, it's marked here, making note of these levels. Right? So the first support downside would be 17,559, which is the previous gap support, and if that's breached, then you have 17,258 nearby levels for the second supports. Right. Yeah, let me look at that once again. Yeah, 17,560 for support. Then you have 17,400, which is the Fibonacci 50 extension levels. Then you have 17,200, 300 levels. Then you have 17,000 and 17,050. All of this has got gap supports also close by. On the upside, 17,800, 17,850, which is the gap resistance. 17,950 and 18,000, which is the Fibonacci 60 previous swing high. Above that, you have 18,100, which is a critical point, 18,115, then 18,200, 18,350 to 400, which is the previous swing low, and likewise. So those are the supports and resistances we can out of this. Bank Nifty similarly, you can see that 38,900, 39,100 is a zone of resistance, and above that you have 39,300 and 39,500, which is also a resistance zone. So 39,425 would be a previous swing high and would act as a major resistance. Above that, next resistance is 40,160, which is a Fibonacci 61 previous extension zone also. Right. Downside, look at the supports: 38,350, 38,600, Fibonacci 50 Fibonacci level is also a gap support, 38,400 there. Below that you have 38,000 rounding number, 38,100 that zone, then 37,700 and 37,800, which is also support. Down below the support can go till 36,800 and 37,000, Fibonacci 38. It's a gap support also is seen at 36,808. So these are the levels of the supports and the resistance that's immediately applicable for the next week problem. Moving on, looking at the momentum and the trend analysis, this is the Nifty, that's a daily charts, and below you are seeing a weekly charts. Right side you have Bank Nifty, daily and weekly as well. It is very much evident that the momentum is rising and clearly rising, and weekly, the medium term trend, momentum of the index also is clearly got into the bull zones, just on the edge, you can say. That's why I said earlier, the price pattern also is not showing a 100% confirmation. There is every chance that it has climbed above the 60. That 60 cannot be a rigid number. RSI 60 is what I'm talking about. It could take a resistance just after climbing to 60 and come down. So don't take that as a rigid line, one single figure. So anything around that area nearby 60, 65, and then reversal could happen. So momentum also indicates that along with the price. Bank Nifty is definitely, clear rising momentum is there, and weekly medium term also has climbed into the bullish zones. So we have a momentum in both the indices on short as well as medium, which is clearly showing bullishness. And what about the trend bodies? The ADX indicator is clearly showing that there is a rising uptrend on the short term on the Nifty, and also there is a rising uptrend on the medium term also. Bank Nifty also is showing the same. There is a rising uptrend of the ADX indicator. It's in the DMI positive zone with the strength rising on the medium term as well as the short term. So there is no doubt about the momentum and trend bullishness along with the price pattern, what it indicates. Moving on to the volatility and the open interest analysis, VIX, India VIX, the fear and greed indicator, what they call, is has cooled off last week, nearly 7%. Now it is at 1760. Remember, we had it very close to the 20 in the mid of the week when we had some small pullback that happened last week actually. Right? So it has now cooled off, which is good, but it is still not very far from the 20, and we have to be cautious when you're trading with instruments in the derivative sector. Open interest analysis is showing, interestingly, it's a long build-up and a short covering in the banking index. Nifty has got long build-up, so it's a futures open interest. Short covering is powerful. It is when the people reverse their positions. Some people have gone short are covering their shorts and moving to long. Right, that could be a blast. That's what the Banknifty is indicating. So no doubt about the futures open interest bullishness. And open interest on the options is for the 18th weekly expiry, August 18th. And the PCR is well above 1, which is indicative that it's bullishness in both indices, 1.01 and 1.2. The levels that's indicated for the August 18th Thursday expiry, which is a truncated week that we have today, is between 17,000 and 18,000. A very wide range is what the option prices have seen, because a truncated week decade should happen. It's at the edge, momentum and price. It is at a critical point on the medium term, and there is every chance of consolidation or a correction or a retracement or a major crackdown. All of this could happen. So writers foresee that and given a wide range of 17,000, 80,000 for the highest put and call rating is seen. Support and resistance basically 70,500, 70,800 is the second level of highest put and call rating. Banknifty, the range is 39,000 and 40,000. It's 1,000-point range that you see. 38,000 and 39,000, the second level of support and resistance where the highest put and call rating is seen. Put call ratio in the open interest build we have seen, it's already bullish. So you can note of these levels, correlate them with the levels in the charts that we have seen, and then positions could be taken out, new positions could be added, you could exit. All of this can be done based on the support resistance that we derive from the open interest in combination with the charts of the same. Now, moving on to the sectorial analysis, we can see that IT sector is closed. Let's look at the charts. And so IT sector, we can see that it's conquered one major gap resistance, but you have a lot of gap resistances up there, and other previous resistance also on the side. So it's shown a clear recovery, and it is into the sideways. It has moved away with a divergence in the momentum, and it's moved away into the sideways zones, which is good, right? But we had a week which is down actually on the IT sector, and we had another sector that was down, which was pharma. Both got significant impact, based on how the US markets are doing. So pharma and the IT were down the last day, and FMCG also was down 1.3% down. Pharma was 1% down. IT was kind of flat, less than 0.5% down. That's all. And so it's formed a spinning top, which is, if it is a peak of a trend, it could indicate some reversal. So some consolidation may come in because of the small body candle. Now look at what metal has done. It's clearly moved 4.5% up. So metal has performed excellent previous week, and reality also has moved up after some pullback. 1% up move. Auto also has moved. So overall, if you see, the most bullish sectors still remain to be auto sector and the FMCG sector, and metal is catching up, right? And short term, if you see, except the pharma sector, all other sectors in the short term on daily charts indicate that there is momentum bullishness. Medium term, most of them are yet to catch up from the sideways to the bullish one, so you have to wait before taking long positions. But auto and FMCG still, even though FMCG was more than 1% down last week, it indicates that there is momentum bullishness that is there most. Moving on, so these are the charts. We don't need to explain that further. IT is having some resistances, but it's in reversal mode. Pharma, metal is getting back to the resistances we were attempted to break out earlier. Again, once again, coming closer to that. Momentum is still not yet in the medium term bullishness on the momentum perspective. Water is trying to break out from a rounding cup pattern. Pharma has a lot of resistances up there, but it's in reversal mode just like ITA. FMCG is attempting to break out, but it's very crucial. It is getting resistance when you attempt that. Right, it's in the channel. Momentum is climbed to the bullishness. Right, reality also is a cup and handle break on very slow movement. It's sideways movement. Right. Index heavyweights, Nifty 50 index heavyweights, if you look, HDFC Bank is having a solid wide range bullish candle last week. Look at this candle. It is clear reversal, clear bullishness. This is open is equal to low, is clearly bullish on a weekly. On a weekly, imagine that since a candle that's formed on a weekly and clear bullishness evident, but the momentum is yet to climb into the bullish zones of RSI about 60 kind of level. It's still below that, but it's definitely rising. HDFC Bank is what we're talking about. Now HDFC Finance, HDFC, normal, HDFC, the twin, is definitely showing that there is bullishness that is seen there as well. But it's at a resistance zone. No, it does not give a clear indication of a close above that. That has still not happened. Reliance Industries is also a solid bullish candle can be seen there. And it's a cup and handle breakout that had happened to Reliance. It had made multiple corrections, but every time that is settling near the neckline of the cup and handle, and seems to be having all greens this time when it is trying to bounce up. So there is bullishness, but in medium term, if you see, it is still not climbed above the momentum 60 yet. That's what Reliance, the index heavyweight there. Moving on, Infosys is showing a resistance clearly. There is a gap resistance there, and there's a rounding pattern. So any positions on the long side would come in only if there is a green close above the resistance zone. Now TCS is at a resistance zone. It is closed above that, but that zone is where it had slipped down after long times of testing that. So any close above that will indicate that it is in a further up move. Now the momentum of the TCS also is in the sideways. Still on the medium term, we're talking about. Short term, it should fine. ICICI Bank is a star. Right? It has made all-time highs, and it has, look at the candle wide range bullishness, and even in the weekly charts, we are showing that it is broken out. Right? It can give good up move if there is a breakout that is happening over this week's high. Right? Any price movements above that, and that stop loss at the neckline could give a good risk reward trade on the upside. So clear bullishness. The most bullish you can say is ICICI Bank. Kotak Bank is showing some consolidation. It had been in the medium term zigzagging in their range, and that's exactly what it is doing. The moment reaches a resistance zone where it had slipped off from earlier, same thing would seem to be maybe happening, but otherwise medium term consolidation sideways movement is what you see. So the strongest guy is ICICI Bank. Reliance also is showing enough strength, right? And HDFC Bank also showing strength, but the most strength is seen in the ICICI Bank among the heavyweights. Moving on to the institutional participation, the foreign institutions are in the buying mode. 7,850 nearby crores of buying happened, right? 11 or 12 days of continuous buying net cash. That's what you see from the Fyers, which is very positive. DIs have been selling in short quantities, and last week it was 2,475 crores of selling that happens. Net longs on the derivatives also was kind of flat. So institutional participation in the markets is what's holding it there. If that continues, the market can rally and break out much more. Moving on to the global markets, if you look at the US Dow Jones, look at what is happening, right? It's at a resistance zone, but clear reversal candle reversal move has happened for the last many weeks. That's the same that you see on the Nasdaq charts that you see on the top, and the S&P 500 charts also. All of them have closed above the resistance zone and then heading up. Now in the Dow Jones, what you have to notice is that in the medium term weekly chart, is it about to close above this resistance zone or not? Remember, it's in a trend line channel up move. If it is breaking out, it could go a long way. So that's definitely good positive move that is happening, but remember that it is still at a zone where it had slipped down after multiple times retesting that earlier, right? So you have to be cautious, but it's good on the global indices, you can see. Crude oil has been falling, but last week it has taken a support in the momentum and then bounced up slightly, and it did not manage to close below the 90, but at least it's below 100, right? But cooling off is good, but if it is again going to spike back in the trend line channel towards the upside, then it may not be good enough, right? Moving on to the gold, we can see that gold has been the sideways movement. After it had slipped down to the previous support zone, it has bounced up and managed to close above the resistance. So now it is maybe slow, but it may be attempting to make another breakout and take out this next resistance on the top. That may be where it is heading, where it may face resistance once again. It's a slow movement. Cup and handle medium term is what you see, but there is a lot of consolidation that's happening on the monthly basis since almost a year now, if you see in gold. So that's a hedge instrument that most of us use. Right. So overall, if you, yeah, one thing that we have missed out is the US dollar. So that has crashed. It's cooled off. So you cannot say it's cool. Yeah, it's a crash. It has just retraced in the cup and handle breakout after breaking out and making a 20-year high. It has retraced a bit and probably forming a handle part of it, and the momentum is still above RSI 60 and has positive reverse divergence is also seen there. So there is every chance that it can dip to the neckline of this cup and handle and then again spike up. That's what the US dollar index is showing. Now look at the currency pair USDINR. Right? That's not directly correlated, but you can see that the rupee is still continue to be weak. But you can say it is below the 80 or all-time high levels. Last week had a spike actually. How much of that? 0.5%, 2.5, 79.62. Dollar also had a spike after making a dip of 0.25%. Not 6.5 so dollars, right? So over the crude is cool off a little bit, but it has spiked. Dollar also had cooled off, but it's still rupee is weak levels. Dollar and US markets, have shown bullishness and serious attempt to reverse back and climb back the resistance zone, but that resistance zone, right? That's what the global markets and commodities. Two picks for the next week. One is Bharat Forge, which is showing a clear cup and handle on the weekly. Momentum is bullish. Trend is also bullish and rising. It can give a good risk reward if there is a price movement that's happening above the neckline, and if we take a trade and we can have a stop loss, the risk reward should be good, right? Based on the Fibonacci extensions, right? So it's a component auto component manufacturer, right? Which is very much active in the among the investors, right? Ambuja Cement's second one, it's an inverted head and shoulder pattern. Momentum is just climbing the bullish zones. If it sustains that, and if it manages to close above the 385 kind of levels where the breakout may be visible to shoulder close, right? So any entry above that with the neckline of the head and shoulder as a stop loss could be rewarding. Or even if you put a little extra stop loss also, if the breakout is happening, we could be rewarding, right? But you have to enter in both the stocks only after you get the signals above the previous candle's high and above the neckline on this case from Ambuja. So two stock picks from the long side. One is Bharat Forge and another Ambuja Cements. This is another play on the Nifty options trading strategies, fully hedged, right? It's giving a probability of profit which is 61. Reasonable one is to reasonable target of 2% of the capital return of investment could work out well. Very good range is what you see, that 17,400, 17,959. That range is not likely to break, is why double diagonal current spread, but you see here the option strategy is being used every week. It gives consistent profit and it gives the advantage of any week of spikes as well, right? So reasonable POP if you're targeting for a 2 to 2.5% only. Wide range also is there, right? So that's a payoff chart of the double diagonal current spread on Nifty for the next week. Is a truncated week where the TKs can be good for option sellers, right? So that's what you see there. To wrap up, My view is cautious bullishness continues to be there for the lesser the last week also, because market is at a crossroads, right? It had given 16 to 21% of entire break, bounce up from the bottom that has happened now at a crossroads. Right? Some retracement may be due. Whether that retracement would be till the 15,300 for kind of levels, or would it be a small retracement to take enough energy again break out of that trend line channel, is all that we have to look at. The weak sell cold off, PCR is bullish, OI build up is bullish, Fyers are buying after a very long time, almost in a year. Momentum is good, trend is good, everything indicates bullishness. So you just can't think of anything else other than bullishness. But at the same time, remember that we have a resistance of 79.21. We are at the top of a trend line channel on the index. We have VIX that's not too much cold off, and we have uncertainty still there. We have the appear rate, inflation, Fed interest rate hikes, Ukraine war, China crisis, crude oil high, no rupee weakness, all this is still there, so you have to be aware of that. Yeah. So positive thing is that every time it moves to the 15,000, it bounces back. A lot of buys. Look at how the Fyers have come back after taking out lakhs crores of rupees. No, just a few months back. Now how actively they are participating. So that is a confidence of the institutions in our Indian market, emerging markets. 17,921 and 39,435 is the level that you look at Nifty and Banknifty levels, right? If you have to hope for a breakout, that's the levels that you have to watch out for, right? So always hedge strategies has to be used, and if you are investing, this may be the last chance for doing that. Invest using SIP mode and cash up your ports, and if there is a reversal that happens, protect your long-term quality stocks with strategies and options, or using hedge instruments, right? Strategies like covered calls or any kind of spreads which are moderate risk managed strategies can be applied. So that's a view of cautious bullishness for the next week, right? I hope this helps you frame your plan for the next week and then trade accordingly and invest accordingly. If that helps you in some way, consider hitting the like button. If subscribe, if you're not subscribed, and share it to maximum. We have very few subscriptions. Appreciate your help. This a lot. Thanks a lot. Happy trading, happy investing. Bye bye.